Monaco 64, home of alternative economics and contrarian views. Today I've got Clive Maund back from clivemaund.com. He's a technical analyst. He does some really good work. I'm going to put a link to his page below in the description. Clive, welcome back.
Thanks, Mario. Good to be back.
Yeah, and we're talking on the 22nd of December, and Clive, gold has made a new all-time high. I think right now, as we speak, it's the all-time high is 44.36, and silver traded above 69 is back below 69. So things are looking very bullish. But we're also going to look later on today at palladium and platinum because Clive thinks palladium and platinum could be pointing to major, even bigger moves in gold and silver. And before we look at Clive's charts, I just want to show my chart that I drew up earlier today, and it's this one here, and it's short term, relatively, but I don't know if you remember, Clive. Jim Sinclair used to call these the Swiss stair steps, and my target now that we've broken to new highs is 5,200 for
Yes,
early February. You just measure the
these
moves and then
hmm,
stick them there after the breakout. So,
yeah, these moves. They tend to be when you have these flags or pennants, which is what these are. The move that follows the breakout from the flag or pennant tends to be of equal magnitude to the move leading into the pennant. So your deduction is actually completely correct, and I think that's what's going to happen.
yeah, okay, okay. I'm glad you agree with me, but it didn't matter if you didn't as well. But let's start with your chart here. I'm going to share it with the viewers and you. The first one is you sent me on gold. So do you want
Hmm.
to go over that one?
Yes, the main point I want to make with this gold chart is that if you look at this gold chart, which goes back 15 years, is that just looking at this chart, it being a long-term chart, it's easy to think, oh, gold's gone up a lot, it's gone parabolic, it must correct, it must drop back. But the key point there's two key points to bear in mind with this chart is first of all, this parabolic uptrend will continue until that parabola drawn on it is broken. Until and if, and it could ascend way above that parabola. The second point, which is a very important point, which was actually I saw in a short video on YouTube by Egon von Greyerz some weeks ago, and he said that something like the dollar has lost 99% of its value since it went off the gold standard in 1971. And he said it's only got 1% of its, I think it was 1%. It's only got 1% of its value left to drop in real terms. And he said, but that 1% is 100% from here. So what he's referring to is the fact that we're in the very, very final stages of this Fiat regime that's been going on since the end of the Second World War or before, and we're heading for hyperinflation because we're in the very late stages of it now. And they've only got basically the politicians have only got and central banks have only got two choices. One is that they try and rein it in now, which is impossible at this late stage without causing a complete credit lockup and a Mad Max scenario, or they just keep increasing, creating more and more money. And the Fed is already orientating itself towards another huge round of QE, which would explain why, gold and silver are going up so much. And this is really what if you understand what this word means, it's the final denouement of this, of both the fiat system and the dollar in its current state. So, we're looking at hyperinflation the way it's going. And this is the reason why the precious metals, not just the precious metals, but all commodities basically, especially the metals, of course, are going up so much because especially in the case of gold, it's simply moving to maintain its value as the values of the currencies fall. So I would say here, the conclusion is of this gold chart, yes, it's gone parabolic. Yes, it looks like it might correct. It could consolidate towards that parabolic uptrend or even drop back a bit. But basically this parabolic uptrend remains in force and it's probably going to continue accelerating until it becomes absolutely vertical, when it's going up huge amounts daily towards the end. So, it's an exceedingly bullish chart, and we're still a long way from the end of it, in my opinion.
Yeah, yeah. I mean, I've shown a chart of the Reichsmark versus the gold mark from the end of World War One to
Yeah.
1923, and it looks very similar to the dollar chart from the late 90s till now. The fractal is larger now, but I'm sure a lot of people were calling tops back then in Germany, and the mark just collapsed. And at the end, you couldn't buy any more gold or silver with the currency, and I think that's what's going to happen there, Clive.
Well, yes, they were using bundles of those Reich marks to light fires, and kids were playing with bundles of these marks in the street. So
Yeah,
it just basically became worthless. And it was the same thing in Zimbabwe, I think, in when was it, the 80s or 90s, when they had a huge hyperinflation. And they printed stamps of something like a zillion, billion, zillion, whatever it was, Zimbabwean dollars. And it was just completely worthless in the end. And that could well happen, not just to the dollar, but other fiat and other countries like the European countries too, because the central banks are doing it on the same path.
yeah. So we've got here as well silver. Let's bring it up. This one here. So do you want to go over this one?
Yeah, this is actually very simple. It's in a melt up and it's not going to stop. Any dips or any weakness, if you see them, they're just buying opportunities. It's just going to carry on up. And when we look at the chart of the ages towards the end of this time, we will see why it's going to continue much, much higher. And yes, it's well above a parabola now. It could pause, consolidate, maybe drop back a bit. But if you see any short-term or even medium-term weakness, it's just a buying opportunity because it's going much, much, much higher. And
Yeah.
an interesting point to make actually on this chart as well is that if you look at the GDX, the Market Vectors Gold Miners ETF at the top of the chart, you can see that it's really only just started to join the party in the last couple of months, or maybe, well, let's say this year or so. But it's got a long way to go too. The precious metal stocks.
No, I agree. I've seen like the chart of the Philadelphia Gold and Silver Index, XAU versus gold,
Yeah.
and it's still nowhere near where it used to be on
No.
average.
Even taking into account that many mining companies would engage in stock dilution and so on, which is habitual. We're going to see gold and silver going to such levels that they're going to be making money hand over fist. So the larger companies, especially, will be able to pay generous dividends, especially the
Okay,
larger gold stocks. Yeah.
so uh, let's look at the S&P versus gold because you told me before we started that a lot of people, like politicians and mainstream financial indicators, people like the BBC, FT, you listen. I don't listen to the radio, but they come out and say, oh, the FTSE made all-time highs is so and so. But when you look at the indices in terms of real money, it's a different story, right? So
Oh,
let you go over that.
well, yeah, you get the politicians on the telly, Trump and so on, saying, "Hey, the economy's great, the stock market's making new highs." Yeah, that's in dollars. How about measuring it in real money, which is gold? And that's what this chart does. You can see for yourself. It's actually weakening. The stock market, the real value of stocks is now weakening compared to, or the intrinsic value of stocks is weakening relative to real money, which is gold. And you can see also on this chart that the stock market actually topped in way back at the start of the millennium in 1999 and 2000 at the top of what's called the dot com boom. Remember that tech stock boom. That was the final top for the stock market. And this top that we're looking at now is absolutely illusory because if you measure it, the value of the stock market against real money, which is gold, and I do not accept the dollar or currency as being real money at all, then it's had a sort of, you could even call it a counter trend rally, if you like, since 2011-12. And it looks in danger of going down hard from here, measured against gold. So, it could actually rally in nominal terms or move sideways. But this chart here we see on this chart, which shows the period from about the 2010, 11, 2012, and you can see that relative to real money, relative to gold, stocks are weakening. And if they break that key relative support here, we could see serious loss in real value of stocks. So basically, if you're in the stock market now, going forward from here, if you're generally speaking, if you're on the stock market or in the general stocks, it's a mug's game because it's going down relative to gold.
Yeah, and you're warning people here. You have been warned. So,
Yeah. Well, if
yeah,
it breaks that relative support, you could see it drop against real money, that's to say gold, at an increasingly rapid rate, which is reason for the warning.
yeah. Um, we're going to move now to palladium and platinum, which are honestly metals I usually don't look at, but it's good that
Mm.
you do look at them. Do you
Well, it
want
was
to
in, well,
talk
it was
about?
interesting. The reason that I looked at them, Mary, right at the start of this month was that I saw that they were about to break out, and I thought to myself, well, I'm like you, I'm not very interested in platinum and palladium because they're a bit kind of off the beaten track. But I thought to myself, well, first of all, I can see that they're going to break out. And then I thought, well, this is good news for gold and silver because it means that we're in a pan metals rally, if you like, meaning that all the metals are going to march higher in unison. Platinum is a precious metal, of course, but other industrial metals like palladium and copper are also going to march higher, partly because of the massive inflation that's coming. So I thought to myself, well, if they're going to break higher, it's going to give added impetus to gold and silver, which is a big reason why I did those articles on palladium and platinum just after the start of the month. And that's what we'll look at now and see what happened to them since
Yeah.
then, because this also has yet another reason for mentioning this at this juncture is because copper looks set to do the very same thing, break strongly
So
higher.
is this the chart we start with, or there's three?
Yeah, it doesn't matter. We can start with this one. There's only two anyway. I think palladium.
I've got
Maybe
three
it's.
for palladium.
Oh, okay. There's a longer term. That's right. Okay.
Yeah.
Well, this palladium, you can see the point at which I wrote the article is indicated there. Palladium recommended here. It's towards the start of December, or just after the start of December, and it's broken higher on another up leg. And what's really sometimes this game is very simple because you can see on this chart a very orderly uptrend and how we've had a rally, then a reaction, then a rally, then a reaction. Now we're having another rally. And you can see that the MACD is going higher. It's probably headed up to the top of this trend channel.
And
That's
you've got
palladium.
charts of gold and silver. Is that like a little bit like a Dow theory, like when
Uh,
metals are confirming?
yeah, kind of. It's what I'm saying there is the reason for putting those on the top and bottom of the chart, the gold and the silver, is that both gold and silver are having an upward impetus on metals like palladium and platinum, which is a factor leading me to conclude that both palladium and platinum are about to break higher, which they did. And of course, it's a virtuous circle because with them breaking higher, then of course, that's a chart from the 6th of December showing that consolidation pattern. With platinum and palladium breaking higher, it's a virtuous circle because that reinforces the upward impetus on gold and silver and also exerts upward pressure on copper, which is yet to move. But I noticed this morning that a lot of copper investments are breaking higher, which was predicted on my site, Maund.com. So, yes, that's a good chart there. It seems to be accelerating higher within that parabolic uptrend shown. Yeah, 6 month.
You want to look at this one, or you want to move to platinum now?
We can move to platinum. There's enough time on that.
Okay.
Platinum, yeah, very nice orderly uptrend there in platinum, and that's the chart from the 8th of December. And if we look at the recent chart, or the chart for as of last Friday, you can see on this chart you can see a tiny bull flag. It broke higher with a gap, and then and formed a small flag, which was a factor leading me to predict a strong rally towards the top of the channel. And if we look soon at the shorter term chart, you'll see that's just what happened. There we are. So it's recommended there at the point shown inside that flag at a very good entry point. Now, if anybody had traded the futures markets on this, on the basis of this recommendation, they would have made a fortune because of the leverage. It's had a pretty big move since then. Good news for all the metals, I think. Now that's the actual, that's the 3 month chart from back then, showing that flag. That's right. And you can see the gap breakout
Yeah,
from that kind of triangular pattern or reaction pattern.
yeah. So, do you want to move to copper now and maybe talk a little bit before we look at the chart?
Yeah, I
Uh,
think copper, we've got I've known for a long time, a year or more, it was an impending supply crunch in copper. Now, the interesting thing with copper, if you look at its long-term chart, it's been trying to break higher, and in fact, it's made nominal new highs for a long time. But it's only when you look at a very long-term chart for it that you can see this chart. You see, it goes all the way back to 1997. And what's really interesting about this is that you can see that it's made nominal new highs. Like, for example, I think it was in 2010 or 11. It did it again just about in 2020, 21, and it's done it recently, last year and this year, but it's been finding it hard to push ahead, right? And I figured out that the reason for this was that if you can draw a trend line across those tops, but also if you factor in inflation, it hasn't broken higher in real terms at all. So I figured, all right, well, I'll put a sort of inflation tilted or adjusted resistance level, which is that grey band you can see there, and draw that along the tops. And I figured if it once it breaks above that, it's really going to take off higher, strongly higher. And then I thought, well, what will be the impetus for this? Well, it will be a rise in gold, shown at the top of the chart, a rise in silver, shown at the bottom of the chart. Plus, now you've had big breakouts in by platinum and palladium, as we've just looked at. So you've got all these other metals racing ahead. So what's to stop this doing the same? And I looked at this again this morning and I thought, well, it still hasn't broken out. And then I looked at a range of copper investments, including some Sprott investments that we looked at on the site a few weeks ago, and they're breaking strongly higher this morning. One of them is Sprott Junior Copper Producers or something, copper miners. That was called code COPJ, COPJ. That one's up 6.5% this morning. So all these copper investments rising strongly now is a sure sign that copper is about to do likewise, to my mind. And so I think any of your viewers watching this who have the ability to trade futures could do a lot worse than buy copper futures now. Because I think it's going to race ahead once it
yeah,
breaks above
yeah,
that band of resistance there. And again, not that many people are interested in copper, but it also bolsters the case for gold and silver yet again, you see. So
I would add futures, unless you're really familiar with futures and options, I wouldn't try it as a novice.
no, no, no.
I'm
I
really,
quite agree. I'm talking
yeah,
about, I'm talking, addressing more experienced
yeah,
traders who
yeah,
are familiar with these
yeah,
markets. So I quite agree.
yeah. I guess there are some copper shares, but stocks that you could buy.
There are some, yeah, yeah, but again, to being juniors, you have to be careful. So
Yeah,
they're not all juniors, but there are larger ones like, say, Freeport,
yeah,
FCX, and yeah, I think I really ought to take a second look at some of the mid large cap copper producers because this train's leaving the station.
yeah. Uh, do you want to look at that company now, Guanajuato?
Oh yeah, yeah, yeah. That was like the reason I've added this
The silver miner, yeah.
yeah, it's a silver miner in Mexico. It's a producer, and the reason I've lighted on this as an example to show that this technical analysis really does work, because it was recommended on clivemaund.com at the point shown here. And we actually bought it there towards the end of August and made a big profit on it. Took profits a little too early at that point shown. But the reason for doing that was because it had arrived at that the upper boundary of that channel. But it had as you can see, after we sold it, it dipped. And then it had what's called it gapped higher and had a throw over breakout, which actually looks a bit like an island top. And it had a throw of a breakout above that trend line in September. And I thought, oh, we sold it too early. But then it tanked and it really fell hard. And I thought, And I projected that lower channel line there. And we bought it back just above the lower channel line. And it's really taken off higher again, as you can see.
Yeah,
And there are
when you
the subsequent charts. I put on a couple of charts actually showing, which were actually at the time we bought it.
yeah,
Uh,
and let me just add something here. Like it's always very almost impossible to get the exact low and high.
oh yeah,
As
yeah,
long
yeah.
as
I
you
mean,
make a good profit like he did here.
well,
That,
There's an old saying which is always leave something for the next man or something like this. So,
yeah.
it's
What
better. Sometimes it's better to be a little early and too late because they can
is
turn
that
on us.
the one you want to look at now? Or
Yeah, that was the one at late August when we bought it there, and you can see that was a chart from the time. You can see it made that fifth wave exactly as predicted.
I see. Okay. And then
And one reason for recommending at that point, in addition to that trend channel line that you see on that other chart, is there was a big increase in volume there, which I took to be smart money buying it ahead of the move.
yeah, yeah, that's a good point there. The volume, record volume, well, record for
Hmm.
that
I'd
period of
rather,
time.
I'd rather like the platinum palladium. It did a kind of, two steps forward and one step back kind of pattern, which is why I labeled it 1, 2, 3, 4. And I thought, here we go. It's about to do another one, which it did. And that was that move we see there in September. It was a really big one. And then we bought it again early in November. Same reasoning basically. And I'd spotted a volume breakout,
Yeah.
um, which preceded the price breakout.
Okay. So now we're going to talk about the chart for the ages. Uh,
Yeah. But
the
I have to say, Mario, at this point, I would like to interject that in all my decades of doing this work, this has to be by a country mile, if you know what that means, my favorite chart of all time. It's
yeah,
just
I mean
epic. Uh,
yeah,
you
I've
know,
never seen such a long teacup and handle.
no,
40,
it
40,
is
45 years.
truly monumental. And if the measuring implications of this chart of the ages are borne out, it's hard to predict because it's a log chart. It's actually hard to actually give a target for the this advance, but we could say that it should be at least equal on this log chart to the depth of the cup, which means that we're talking about a silver price somewhere in the hundreds and probably say, I don't know, $200 or $300, which is what my
At least I would say.
yeah, at least
I've
which
looked at
is
this logarithmic projection and I get 600.
Yeah, yeah. And, Mike Maloney's been talking about this and various other people. And, their reasoning is sound. And, we've got a terrible supply situation in silver. And one reason for this appalling supply situation is that the price has been kept. It's had a lid kept on it for years by a lot of manipulation. And of course, the result of all this manipulation, price suppression for decades has been that there's been little incentive for miners to want to produce silver in quantity. So even though I know it's a byproduct of base metals production, but it hasn't been much incentive, you see. So therefore, you've got a massive shortfall in supply. There's no new mines coming on stream, and it will take at least. I think my brother, who's a golden metals geologist, said it'd take at least 10 years to bring significant new mines on stream.
Yeah. What do you think
So
shape the cup and handle? Do you agree with me that it's showing that it's been kept suppressed for so long, and
yeah,
now it now is bursting out of the
Well,
to keep up.
another thing about it is that it's psychological because what was resistance becomes support as it advances, and the further it advances out of this pattern. I said before I likened it to a kind of gravitational tug. So in other words, it's a bit like a rocket blasting off. The further the price gets away from this cup and handle, the less it's likely it is to be dragged down towards the top of it. So we've been seeing it make silver making new highs in recent days and weeks, and it's got up near to 70 as we speak. It got up to about 69 this morning, and it's well on its way. And this chart, remember, I produced this chart about 4 or 5 months ago, I think it was, when it was still inside the pattern. And another interesting thing that viewers might be interested to observe on this pattern is that within the big cup and gigantic cup and handle pattern going all the way back to 1980, we have a kind of lower order cup and handle that has formed over the last, since the 2011 highs in the precious metal sector. You see a lesser order cup and handle, which we were following in much more detail in the past. And it's also predicting a breakout. That's what makes that key, that $50 level. I labeled it $55 just to make sure it got well clear of a resistance. I said that once it got above 55, that was it. It's on its way, and it's probably not coming back. And we're going to see much bigger. It's going to rise at a much more rapid rate the further it gets away from this pattern. And the fundamentals back that up because the supply situation is absolutely dire. As pointed out by many observers, like Mike Maloney notably. It's just a dire situation for the supply of silver. It's used extensively, in solar panels, electric vehicles, now in military applications, all these wars starting up. So the demand for it is enormous, added to which, central banks are actually starting to label silver as a monetary metal.
Yeah, yeah.
And in addition to which, it's been afforded critical minerals status in the US, I think, in the recent
And
past. So,
China too.
yeah. So, what's to stop it, basically? And,
China China's going to put export controls as of the 1st of January, and
yeah,
they're the second biggest producer of
yeah,
silver.
yes, yes. So, it just what's to stop it? And, if I would say, I think I said in one of my recent articles, that old saying, oh, you shouldn't go betting the farm on something, right? Well, I would say not only should you go betting the farm on it, you should bet everything else you can lay your hands on that, you don't need for basically, if I had, unused property, I would just sell it for whatever I could get it and put it into silver
Yeah,
because, you know,
I wouldn't do a Michael Saylor though, mortgage everything and put
no,
it.
no, no, no. I'm not talking about going into debt, but I'm saying
Yeah.
on an
Oh, I agree. Yeah.
I'm talking opportunity costs here. So imagine you had, say, a second home, just an example, right? And I'm not actually telling people to do this. This is what I would do. If I had, say, a second home I wasn't using and I don't, and, it's just suffering, having to pay for or suffering deterioration, having to pay all the usual fees, I would say sell it at a 20% discount and buy silver. And you say, oh, well, you sold it at a 20% discount to market. But if silver goes up 100% in a year, who cares?
Yeah.
It,
Clive, before we wrap up, do you want to tell the viewers who are interested in more short-term trading instead of just holding on to your physical gold and silver, how they can get in touch with you and what's the cost of your service as well?
oh, yes, you can take out a sort of trial subscription for $75 or a 3-month subscription for $150. And you can contact me at clivemaund@gmail.com if you want to write to me. And you can just go straight to my site, clivemaund.com, and there's a subscription page there. It's quite simple. And try it out. If it doesn't work, you don't have to keep going with it. It's only $75 for a month. And there's a wealth of recommendations and so on the site. And while we take a long-term view of commodities like gold and silver and platinum and copper and so on, as you've seen with Guanajuato silver, we engage in a lot of intermediate trend trading, which is highly profitable because you can capitalize on an intermediate trend. You don't give back half your gains and the reaction that follows. That's the whole idea of it. So we tend to be intermediate term traders, not so much short term because you have to be sat, on the edge of your chair all the time, in fact. But the intermediate trends, say lasting 3, 4 months or whatever, can vary from say 2 months to say 6, 7 months sometimes. They can be highly profitable, and you can even play the downside sometimes, depending on what it is. Although in this silver market, I don't think I'd be risk playing the downside at all. So yeah, so anybody who's interested, come on over. You'll be most welcome. And a last point I'd like to make, or last thing I'd like to say, is to wish all viewers a happy Christmas period and New Year, and try to relax a bit. Even with all this going on, try to relax a bit over the next week or so, or 10 days. Give yourself a bit of a break to recharge your batteries. And if you find you really can't stand being around some of your family members, just slink off to a side room and come and visit me at clivemaund.com, or send me an email. So
Oh,
send me an
okay.
email or whatever.
Yeah.
But yeah, try and relax a bit over the next week or so, because it's going to be quite a year ahead, I think.
Yeah, even though we could have some fireworks in the next week in gold and silver
Yeah,
because it's
yeah.
the
But if
bear
you're if
market.
yeah, if you're in position for it, as we
Yeah,
are, you can relax anyway, because you just basically sit there and watch your investments going up
yeah,
every so often, and just go and eat some Christmas pudding or turkey or whatever.
yeah.
Enjoy life too.
Yeah, Clive, I'm going to wish you as well a happy Christmas and yeah, Merry Christmas or and Happy New Year. And we'll keep in touch and we'll keep an eye on these markets.
Okay, great. Thanks, Mario. All
You're
the best to
welcome.
you and your family.
It's to you as well.
Yeah. Goodbye.
Bye.